It's about that time of day again. My name is Joseph. Tuesday evening, September 26th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro tonight. Crude is bullish and trying to retest yesterday's high ahead of tomorrow's weekly inventory report. But we're a little too close to some overhead resistance levels tonight, so I'm looking for traps and seller failures to finish the move higher on Wednesday. The S&P is sideways and range bound, so my plan is to buy the low, sell the high, and focus on failures outside the range tomorrow. Nasdaq is range bound as well with a triangle, which tells me to use the 2-try rule to sell high and buy low as far outside that triangle as I can tomorrow morning. And of course, tomorrow gold is bearish with a spike in channel, but two major support levels are telling me to stay patient and look for selling opportunities up in the battle zone tomorrow. And of course, we can't forget about the euro. The euro is bearish and trying to retest today's low, but the recent test of the battle zone was very strong for the bulls. So I'm waiting for a second try from the bulls before looking for selling opportunities on Wednesday. Speaking of Wednesday, I have a great plan of attack for tomorrow's session. We got some trading ranges, we got some strong trends to work with, we get a whole bag of tricks setting up for the hump day session tomorrow. Before we jump in and put the plan together for Wednesday's session though, you know how we do this. Only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets and watch the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when that newsletter goes live. Don't forget to follow me on social, lower left-hand corner, whatever your flavor of choice. StockTwits, Twitter, Facebook, LinkedIn. I'm always sending out important charts, links, and updates throughout the week. And speaking of charts, grab those charts, all the charts from tonight's video. How easy is that? You can have them on your computer for tomorrow, right where it says click here to download today's charts, grab those charts, and be ready for Wednesday's session. Speaking of Wednesday's session, what are you waiting for? Come join me in the trade room as a guest. Grab that free pass. If you're not a member here at School of Trade, make sure you grab that free pass. Come out and join me here as a guest in the trade room. And if you have any questions about that free pass or anything we cover here tonight on the newsletter, you can always hit me up on live support right on the right-hand side of the website. I look forward to answering all of your questions. We are only as good as our next trade, so we better get ready for tomorrow, hump day session tomorrow. And so, of course, as I've talked about yesterday, we are squeezing out the last few drops of the final week of the month of September, right? Whenever we talk about the end of the month, as I mentioned last night, we talk about two things. One, increased volatility, and two, those prior month open, high, low, close levels. So as I mentioned last night, we are expecting the volatility to increase as we get later in the week, and we are watching those prior month open, high, low, close levels. Wednesday, Thursday, and Friday, they will start taking center stage. As far as news goes for tomorrow, we have no major news in the overnight session tonight, so nothing to worry about there. As far as news tomorrow goes, not a lot here in the overnight London session. We go all the way down to 8:30 a.m. Eastern Time for the U.S. durable goods orders tomorrow at 8:30 a.m. Eastern Time. That is typically a market-moving event. Not all Red Star news events are market moving events, but that typically will get things moving and shaking, especially right for all you inflation bugs out there watching the US dollar. That means gold and euro. So 8:30 a.m. is the first big news of the session tomorrow morning. And of course, if you're an inventory trader, right, if you're a crude oil trader, tomorrow is your early in, early out. We got the inventory report at 10:30 a.m. Couple things, remember, if you're trading crude tomorrow morning, early in, early out, I always tell people anything before 10 a.m. on Wednesday is fair game. My official cutoff, my alarm goes off Wednesday mornings at 10:15, right? But again, after 10 a.m., you've got to have a pretty good reason to be trading oil. You'll feel it. You'll feel it. It'll be really slow and real sloppy after 10 a.m. Eastern Time. So get to it early. Then, of course, I always recommend give it at least 5, sometimes 10 minutes after that news comes out out. In other words, by 10:40, 10:45, we're looking for additional opportunities as we head into lunch. Also, don't forget, I publish my Wednesday support and resistance levels on this newsletter every Tuesday evening. Is it Tuesday? It is Tuesday, right? So they'll be here tonight. You can find those. I've had some fun with you guys here. So you can find those inventory support and resistance levels. I sent them out to all of my social media channels a few hours ago. I've got them posted below the video tonight on the blog. You'll also see them on the chart here in just a moment. So if you want to grab those support and resistance levels for Wednesday, right, don't forget, scroll down on the blog here at Sideways Markets. There's a link that says click here to read more. Follow that link, right, and grab those levels. You'll see them again in just a moment. That wraps up the news for tomorrow. Get at it early. Get out of there early if you're a crude trader. And again, we got the 8:30 durable goods orders, which should get things moving and shaking around the gold and the euro. Watch those prior month levels. Watch those prior month levels as we continue through the rest of the week, and we'll finish up the month right on Friday. Let's jump in. We got a lot to cover here tonight. We'll go crude oil, S&P, Nasdaq. How about some gold and a little dash of the euro to finish this thing up tonight. Now, first of all, starting off with crude oil, you can see in the lower right-hand corner, I have all of the support and resistance levels slated for Wednesday. Either write those down off the chart or just scroll down on the video, right, and you'll find that. Right, and you'll find that all that in the text below the video tonight on the blog at Sideways Markets. Let's jump in. Crude is bullish and trying to retest the highs, but we're getting a little too close to the resistance levels overhead, so my plan is to look for traps and failures on the pullback to avoid buying into the high tomorrow. One thing that does stand out is that this last bullish spike higher came from this afternoon's API report. That comes at 4:30 Eastern time every Tuesday afternoon, by the way. That means this push higher needs to be confirmed. My goal is to use the two-try rule, watching the sellers try twice during the next pullback, then looking for buying opportunities when they failed. And of course, we can't forget about tomorrow's weekly inventory report, so of course I'm watching the clock, avoiding trades after 10 a.m. and then looking for new opportunities as of 10:45, 11 o'clock when the price action slows down. I think the most important thing on this chart right now is to zoom out a little bit and remember where we came from yesterday, right? So if we look at that, if you recall that big run up yesterday, right? And of course, I gave you guys a couple battle zones to work with, right? And we, of course, right, pulled all the way back to that lower battle zone right here today. Well, now the buyers, right, have their two-legged pullback, and now they're trying to go back up and retest those highs, right? Beautiful opportunity here to be a buyer on seller failure, right? If you didn't get in on the seller failure, you saw the price go higher, trap low. So there's a lot of different ways in which you were able to get in on this move if you were watching last night's newsletter. Well, now here we are. You know, we're getting up in those nosebleed seats, right? Now we're a little bit high up on the chart right now. We can see the objective, right? The objective is really that prior day high, right around that, right? That 52, we'll say 25, 52.30 area, right up overhead. And we're knocking on the door, right? We're right there, right? So the last thing I want to do right now is I don't want to be a buyer up here. And you guys watch the newsletter every night. What do I always say? Whenever the only option is to buy high, what's the plan? Traps, right? Traps. So traps, of course, in this point now, trap low below that 71 even down in that battle zone. That will be nice. What I really want to see, though, is I want to see 1, 2, and then once the bears try twice, twice, then I'll feel comfortable, right, being a buyer going back up to retest that high. If the market keeps going higher, though, if we do keep punching higher here in the short term, watch that prior swing, and then that becomes, right, that becomes your level there for a trap there. So if we don't punch higher, right, if we do pull back, 1 try, 2 try, buying back up from there, or if we do continue going higher, watch those traps below those prior swings. Now, of course, don't forget, all I can do right now is give you guidance on the way back up to retest that high. Once we get back up to retest the high, then it's all about acceptance or rejection, right? So let's say, for example, we successfully get up to that high. Are we seeing acceptance? In other words, are we seeing price explode through it? Are we seeing price acceptance through those highs? Or are we seeing price rejection, right? Are we seeing rejection? In other words, right, are we seeing the buyers take their profit? Assuming we get the price going through the high, my goal is to get that moving average up above that high and then look for that fake out, breakout, pullback, right, to buy that dip here tomorrow. The key is strength, right? Get that move real strong up through that high, because remember, the high, that's the objective, right? And I want to make sure I see strength going through it to confirm that buyers are looking for more. If we can rewind the tape a little bit, right, we go up, right, we pull back and we see rejection. Now we have to start looking at this as a big trading range, right? So if we do go up and we see rejection off that high, you've got to be thinking now, right? We're looking at rotation back down to the opposite side of that range. So don't be surprised if sellers take a quick grab on that and grab it and bring that price back down. Then, of course, it's one try, two try, look for the turn, right? And then we'll buy right back up from there. So this thing definitely looks like it could be easily a move up and then back down, right? Turn bearish in the short term here tomorrow. What would it look like? It would be strength, right? Pullback, strength. Remember, those are the three things we always look for when it comes to a trend reversal. It's not enough to get a strong move up or down to reverse the trend. You have to get that pullback to hold. So a quick recap here right now, right? Looking for that up. Again, right? Up, trap low, buy that trap low. Stay away from buying the high, or down, one try, two try, buying up from there. Once we get there, do we see price acceptance? If we do, that should get the moving average up above that top, right? And that'll be our two-legged pullback, right, for that buying opportunity, buying low. Or do we see the price rejection? If it rejects off that high, right, it may just turn into a trading range, which, of course, at that point, we'll still look for those traps to keep buying low at that point. But a lot of times, though, when we reject the highs like that, right, they go hunting for that deep part of the pullback. And so don't be surprised here if we go up, reject, strength, pullback, strength, and we find ourselves all the way back, right, to that low. If that's the case, wait for that strength, pullback, strength, and then we'll go out and find our new bear channel, right, new bear channel, focus on selling high, right, and back down to retest that low. Just be careful though, if we do end up back down around that low, right, be careful, because that's going to be major support down at 51.43 for tomorrow. So as you can see, a lot of this has to do with kind of what happens in the next few hours, how the market reacts around the highs when we get there. Again, tomorrow's an inventory day. Inventory days are always a big question mark. We got the prior day high overhead at 52.28, right? The prior month high is down at 51.06, right? So as we get close to that prior month, as we get close to the end of the month, right, those prior month levels start to act up here, right, as price magnets. Should be entertaining tomorrow morning. We'll see how the inventory report, right, comes out tomorrow, and we'll trade from there. Back to our S&P now. S&P is slightly bullish, but really trading sideways inside of a triangle, which is basically traded the same way as a range, which tells me to sell the high, buy the low, avoid the middle, and focus on failures tomorrow. One thing that stands out on this chart is how much open space, right, above and below the range we have, which tells me that there's potential for a pretty significant breakout. And those breakouts may appear to be successful when they are ultimately going to fail. So tomorrow, the name of the game tomorrow is patience, to wait for that two-try rule tomorrow. It'll be critical if you want to find the best trading opportunities. You know, as I look at this chart and kind of zoom out a little bit larger here, you can kind of see we're kind of right smack in the middle, right, of the right prior day high, prior day low, right? We're right smack in that middle. And you'll notice, right, we never went, oops, sorry about that, wrong button, right? We never went back down to retest the low, and we haven't made it back up to retest the high. So there's some big targets, right, up around those highs and those lows. Now, of course, when we look at the chart, though, right, we're nice and tight, right, like a taiga, right in the middle of that range. So we're definitely range bound. The key is going to be up, back down, or down, right, and back up. That's going to be the key here, right, for tomorrow. So looking at the chart a little bit tighter here now, right, zooming in a little bit closer. There we go. A little bit easier there. Really the edges, right? You want to really focus on those, right, on those edges. And in all reality, I could have made this battle zone. I mean, this battle zone literally could be a lot, right, a lot larger. Speaking of confirmation, I always get lots of questions. How do I do this with you every day? What's the best way to become successful in the shortest period of time? If you want to get the most bang for the buck out of your time and money, the best thing I can advise you is to find yourself someone who has experience, look over their shoulder, learn how they do it. I'll tell you, it took me 3 blown trade accounts, 6 figures in losses, right? I'm still learning every day. I'm by no means an expert trader by any means, but I'll tell you right now, learning to do this on your own, it'll take you a whole lot longer and you'll lose a whole lot more money than what it takes to find a mentor and learn with somebody. And remember, our beginner, intermediate, and advanced classes are great for every type of trader, whether you're brand new, right, or you're a grizzled veteran. And then we're going to trade the strategy together every day in our trade room. So no better way to learn and earn than to look over my shoulder every day. I'm going to make sure if you're a new trader, you're doing things right the first time. And if you're an experienced trader, I'm going to make sure we break those bad habits and get you building good habits. No more chasing markets, no more revenge trading, no more trading your emotions, right? We're going to get those bad habits, right? We'll get those out of your system and get you on, right, to better things in your trading career. Guys, if you want to learn more, get a great free trial on the homepage of the website at schooloftrade.com. Join the free trial. If you're on the homepage, if you're on the YouTube video right now, there's a link in the description of that YouTube video. That'll take over here to the blog at Sideways Markets or to our homepage, and you can register for our free trial. And don't forget, I'm always here to answer questions. If you have any questions for me, hit me up on live support. I would love to speak with you, right, and love to welcome you in on that free pass. Guys and gals, great job today. It's been a great month of September. We're squeezing out the last few drops here this week. Tomorrow is a Wednesday, so early in, early out for all you crude oil traders, right? And don't forget that early morning news we spoke about earlier. That'll do it for me. Adios, amigos. Bye-bye for now.